Hi everyone, I hope you're all having a good day and thanks for joining us for this webinar. My name is Helen Myers. I'm the editor here at FocusEconomics and I work closely on the Middle East and North Africa region. FocusEconomics provides analysis and consensus forecasts for 132 countries and 34 commodities, both in our monthly economic intelligence reports and online via our Focus Analytics platform. We work with a network of over 1,200 local and global analysts to produce our consensus forecast for more than 30 key economic indicators. In this webinar, I'll be discussing the economic outlook for the MENA region this year. I'll start with a basic overview of how the region performed last year. Then I'll go over our outlook for 2022 and the main challenges facing the region. I'll also explore the future of the energy market and diversification efforts and provide an overview of the individual outlook for MENA's main economies. So let's start with a brief overview of 2021. While the regional economy bounced back solidly on average last year as global economic activity revved up, vaccination efforts accelerated, and higher energy prices buoyed government coffers, the recovery was in reality highly uneven, both among countries and between sectors. Looking at countries, Israel's economy went from strength to strength, aided by a world-beating early vaccine rollout and a dynamic tech sector, and GDP there is now comfortably above its pre-pandemic level. Egypt also performed fairly well, having dodged contraction entirely in 2020. However, oil exporters in the GCC and beyond were constrained by OPEC production curbs, which only began to be eased gradually from May. Moreover, a range of other idiosyncratic factors, including a homemade economic crisis in Lebanon, conflict in Yemen, and US sanctions on Iran, constrained activity elsewhere in the region. Turning to sectors, non-energy activity was the key driver of growth last year, thanks to a recovery in tourism and the lifting of restrictions, which was partially offset by ongoing contractions in energy output. In Saudi Arabia, for instance, non-oil GDP was well above its pre-pandemic level in Q1 to Q3 2021, in sharp contrast to oil GDP. Our analysts expect regional growth to have reached 3.1% in 2021, following the 2.7% fall in 2020, with the expansion in the GCC likely a milder 2.6%. Both figures are well below the expected rise in global GDP of 5.6%, which reflects MENA's reliance on the energy sector and a lack of other important growth engines. Growth in MENA is set to accelerate to 4.5% this year, according to our consensus forecast. However, this is chiefly due to OPEC loosening its production cuts, which will lead to a marked acceleration in the GDP growth of oil exporters. Despite a recovery in tourist arrivals, the region's non-oil economy is likely to lose some steam, in line with less expansive monetary policies and milder growth abroad. There are several key factors which will have a bearing on MENA's economic activity this year, all posing important risks to the outlook in both directions. The first is the evolution of the pandemic. Although the impact of the current Omicron variant on regional and global economic activity looks likely to be fairly mild, it will still hold back tourism in the near term. Looking forward, while the emergence of further COVID-19 variants is a given, their economic relevance will depend crucially on their severity, transmissibility, and ability to evade vaccines and treatments. In any case, any future COVID-19 wave should still be far less economically harmful than past waves, thanks to pharmaceutical companies' ability to retool existing vaccines to tackle new variants, governments' greater preparedness and reluctance to impose sweeping lockdowns, and the improved ability of citizens and firms to work around any new restrictions. The second factor is OPEC's production strategy. As things stand, the cartel is aiming to raise production by 0.4 million barrels per day each month until cuts are fully phased out later this year, and this is the scenario that our analysts are likely factoring into their forecasts. However, with oil prices still fairly high, external political pressure, particularly from the US, which is battling surging price pressures, could lead OPEC to accelerate its schedule. This would provide a boost to MENA's oil sector. On the other hand, any notable setback to the global recovery, which threatens to weigh on oil prices, could cause the cartel to reduce or pause its output hikes, weighing on regional growth. It should be noted that currently OPEC members are not meeting the target of 0.4 million barrels per day due to factors such as underinvestment. Third, given that many currencies in MENA are pegged in some way to the dollar, the Federal Reserve's monetary policy will have an important bearing on regional activity. Recent noises from the Fed suggest that rate hikes could come sooner and faster than markets are currently expecting in order to tame inflation. This would force many central banks in MENA to also hike, posing a downside risk to regional activity. Even countries without dollar pegs could come under pressure to tighten their stances if the Fed's more hawkish policy leads to currency flows from emerging markets to the US. Currently, the consensus among our analysts who have updated their forecasts since the start of the year is for at least 3 rate hikes by the Fed in 2022, although the discrepancy among analysts is wide. Finally, geopolitical developments will be important to watch given the region's historically volatile nature. Iran's external relations are one hot topic. If ongoing talks on a renewed nuclear deal are fruitful, this would pave the way for a loosening of international sanctions which have crippled oil production, providing a boost to Iranian economic growth. On the contrary, if talks break down, Iran would likely accelerate its uranium enrichment program, inflaming tensions with countries such as Saudi Arabia and Israel. In either case, Iran's ties with its regional neighbours are likely to remain poor, and a struggle for influence with Sunni Muslim countries and Israel is likely to continue playing out in places such as Iraq, Lebanon, Syria, and Yemen. These 4 countries are, in and of themselves, additional sources of uncertainty this year. In Iraq, the reduction of US influence could allow the Islamic State to regain ground, while Lebanon's economic tailspin will intensify without decisive reforms, and lingering conflict in Syria and Yemen could intensify. Similarly, although a ceasefire reached in Libya in 2020 is currently holding, there is still a risk of a resurgence of violence in the country ahead. Moreover, ties between Saudi Arabia and the UAE, which are historically close allies, could continue to fray as both jostle for economic superiority. 2021 already saw a dispute between the two countries over oil production quotas, for instance, while a surprise Saudi attempt to force companies on government contracts to base their headquarters in Riyadh was seen as a thinly veiled swipe at Dubai's status as the regional business hub. Israel's relations with Palestine are another concern, particularly given 2021 saw the worst conflict in years between the two sides. While the direct economic damage to Israel will be limited, a further prolonged flare-up could cool budding economic ties between Israel and its Arab neighbours. However, providing such conflict is kept at bay, improving Israeli-Arab ties, following a host of diplomatic agreements in the last few years, pose an upside risk to the regional outlook this year through stronger investment and tourism flows. In a similar vein, Qatar's relations with its neighbours are warming after the Saudi-led blockade was lifted in early 2021, with Saudi Prince bin Salman recently visiting Qatar. A continuation of this trend would also be positive for MENA's economy. Turning to prices, regional inflation is expected to dip to 11.1% in 2022 from 15.1% in 2021. However, the still elevated 2022 figure masks huge differences between individual countries, some of the largest among all world regions. Roughly 2/3 of MENA, comprising all the GCC, Israel, Jordan and Morocco, will actually enjoy very low inflation rates. A few countries, namely Algeria, Egypt, Iraq and Tunisia, will experience moderately high rates due to a mixture of high money supply growth, the part-monetization of fiscal deficits and currency depreciation. Then there will be a few nations with extremely high inflation rates due to idiosyncratic factors: Iran, Lebanon and Yemen. Iran and Lebanon are set to continue suffering from parallel market currencies, which are far weaker than official rates. In addition, price pressures in Iran will be spurred by ingrained high inflation expectations following many years of elevated price pressures, and monetary financing of the deficit as international sanctions continue to choke revenue. Meanwhile, in Lebanon, the chronic mishandling of the current economic crisis is likely to continue to spur shortages of basic goods. In Yemen, the entrenched conflict between Saudi-backed forces and the Houthis will also hamper the supply of goods, boosting their price. There are several factors that cloud the inflation outlook considerably. On the external front, while supply constraints are expected to gradually ease this year as global demand slows and the impact of COVID-19 fades, the speed of the normalization is still uncertain. As shown by the graph on this slide, shipping container costs are still at extremely elevated levels. Plus, as I mentioned earlier, there is still a lack of clarity over exactly how hard and how fast the Fed will raise rates this year. Fed hikes could have a double-pronged effect on regional inflation. On one hand, interest rates in MENA and around the world will increase in lockstep, dampening demand and prices in turn. On the other, tighter US monetary policy could lead to FX depreciation in the MENA economies with free-floating currencies, boosting inflationary pressures in those countries. On the domestic front, the potential further withdrawal of subsidies and tax hikes in countries with shaky fiscal positions, such as Algeria, Bahrain, Lebanon, and Tunisia, pose an upside risk. In some cases, these fiscal changes are likely to come as part of IMF-mandated programs. Increasingly common extreme weather events are another important risk. Drought conditions spurred food price pressures in several MENA countries last year, for instance, and, as ever, geopolitics will play an important role. If sanctions on Iran are rolled back as part of a renewed nuclear deal, this would likely dampen inflation in the country markedly by boosting the currency, reducing the need for monetary deficit financing and improving the availability of goods. Or take countries currently going through social turmoil or conflict, such as Lebanon and Yemen. Some stabilization in their situation would also help cap inflation, while any flare-up in regional conflict would put upward pressure on prices. Now let's take a look at the energy market for this year. Following strong rises in prices for crude oil and natural gas, MENA's key commodities, last year, our analysts currently expect prices for both commodities to average slightly higher in 2022. In the case of Brent, prices are seen rising from an average of $70.9 per barrel in 2021 to $74.1 per barrel in 2022. Natural gas prices are expected to rise from $3.72 per 1 million British thermal units to $4.01. That said, the 2022 average prices for both commodities are still set to be lower than those recorded in Q4 2021. If energy prices this year come in as forecast, there will be several consequences for the region. For one, oil exporters would feel no need to pause the planned phase-out of OPEC production cuts by the second half of this year, which is growth positive. Plus, the viability of the host of energy investment projects recently announced or currently underway in the region, more detail on this later, would be secured. Finally, together with higher energy output and fiscal consolidation measures in many countries, the region's budget and external balances will improve. That said, even an average oil price above $70 per barrel is still below the fiscal break-even level of some oil exporters, such as Algeria, Bahrain, and Kuwait. These countries will continue to run sizable fiscal deficits and rack up more public debt in the absence of deeper structural reforms. While the near-term future of fossil fuel energy prices looks fairly solid, longer-term prospects are much less certain due to a global shift towards renewable energies. Conscious of this fact, MENA's oil exporters are all embarking on diversification drives with varying degrees of success. 2021 was a busy year on this front, with the UAE making the biggest strides. The country implemented a barrage of reforms, including a Western working week, changes to the labour market, and new funds to support SMEs. Elsewhere, in Saudi Arabia, authorities announced a national investment strategy and reforms to the legal system, and boosted the nation's attractiveness as a tourist destination through events such as the Red Sea International Film Festival and the Formula One Grand Prix. Meanwhile, Qatar passed a law allowing foreign investors to fully own domestic listed companies, and Oman altered its visa rules. Plus, as part of the COP26 climate summit, the region's economies announced CO2 reduction targets and greater investment in renewables. As things stand, Bahrain and the UAE currently have the largest non-oil sectors as a percentage of GDP, although most other oil exporters have seen their non-oil sectors grow in importance over the last few decades. In the next few years, our forecasts are for solid non-oil GDP growth in key economies, in many cases outpacing headline GDP growth, as governments continue to channel funds to diversification projects. Moreover, economic competition between countries in the region could act as a catalyst for additional business-friendly reforms. That said, non-oil expansion could be limited by the fact that governments are all looking to tap into similar economic sectors. Additionally, without changes to allow for a more liberal Western style of living, such as those enacted by the UAE, MENA may struggle to attract the international firms and highly qualified citizens it needs to thrive. Finally, there is a danger of rising protectionism. Indeed, Saudi Arabia's recent move to force firms working with the government to set their regional headquarters in the country is already a sign of such a trend. In any case, fossil fuels will continue to have a predominant role in the region's economy in the coming years. And while aiming to diversify away from oil, MENA's leaders are simultaneously hedging their bets, with the next few years likely to see strong investment in the energy sector. For instance, Qatar plans to ramp up its LNG capacity by around 60% by 2027, while Iraq recently reached a deal with energy giant Total to build 4 giant energy projects, and Algeria's state oil firm is expected to invest $40 billion over the next several years. As a result, our analysts expect oil production to rise steadily across the region over our forecast horizon. Finally, let's take a brief look at the 2022 GDP outlook for key MENA economies. We'll start with Egypt. Here, growth should speed up this year on stronger investment and exports amid the government's reform programme, although higher inflation will likely dampen consumption growth. The Omicron variant, high public debt, and the large fiscal shortfall are all important risks to the outlook. Our analysts see growth of 5.2% this year. Now to Iran, where growth is also expected to accelerate this year as oil output rises and the impact of the pandemic lessens. However, the outlook hinges crucially on the outcome of talks to revive the 2015 nuclear deal, which, if successful, would pave the way for a rollback of international sanctions. Extremely high inflation, the parallel exchange rate regime, and poor relations with neighbouring Sunni Muslim countries are all downside risks. Our analysts have penciled in a 4.0% GDP expansion for this year. Turning to Israel, growth will remain upbeat in 2022 following what was likely the strongest expansion in the region last year. The government's proactive vaccination strategy should limit any future COVID-19 outbreaks, while the recent approval of the first government budget in several years bodes well for confidence. Moreover, a dynamic tech sector should be a key growth driver, while stronger relations with Arab neighbours should support tourism and investment. Tensions with Palestine and the fragmented governing coalition are risks. Our analysts see economic growth of 4.5% this year. In Saudi Arabia, activity should gain momentum as OPEC oil curbs are lessened, the government's ambitious diversification plans continue to bear fruit, and the sovereign wealth fund ramps up domestic investment. However, the country's conservative social climate will likely continue to hold back expat inflows and the relocation of firms from other parts of the Gulf. The consensus is for 5.6% GDP growth this year, more than double 2021's projected level. In the UAE, growth is also seen picking up thanks to higher oil output. Plus, the Dubai World Expo will provide a boost to activity early in the year, while the recent sweeping economic reforms should spur the non-oil economy. However, increasing economic competition from Saudi Arabia could slightly erode the country's dominance as the key regional business hub. We expect a 4.5% expansion this year. So let's wrap up with our bottom line for the MENA economy. The regional recovery was uneven last year, with downbeat oil sectors contrasting a pickup in the non-oil economy. This year, growth should gain steam on looser OPEC oil production cuts, while COVID-19 variants, OPEC strategy, the Fed stance, and geopolitics will be key factors to watch. Inflation will be mild this year in most countries, but extremely elevated in a few others, due to a combination of weak parallel market exchange rates, deficit monetarization, conflict, and economic mismanagement. Turning to energy markets, both oil and natural gas prices are seen averaging higher in 2022 than in 2021. Finally, the region took further steps towards economic diversification last year, and the continuation of this trend should support non-oil growth ahead. However, fossil fuels will remain a crucial part of the regional economy for the foreseeable future, and MENA's energy output is expected to rise over our forecast horizon. That brings us to the end of the webinar. Thanks very much for listening. I hope you've enjoyed this session on the Middle East and North Africa's economy, and I wish you all a great day.